and gentlemen, good day and welcome to the investor call of Cosmo First Limited to discuss the Q1 FY2024 results. Today we have with us from the management, Group CEO Mr. Pankaj Poddar and Group CFO Mr. Neeraj Jain. Starting off with a statutory declaration, certain statements in the conference call may be forward-looking. These statements are based on management's current expectation and are subject to uncertainties and changes in circumstances. These statements are not guarantees for future results. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. Now may I request Mr. Neeraj Jain to take us through his opening remarks, subsequent to which we can open the floor for the Q&A. Thank you and over to you, Neeraj ji.
Well, very good afternoon, ladies and gentlemen. I am Neeraj Jain, Group CFO at Cosmo First Limited, along with my Group CEO, Pankaj Poddar. We'll start the call with a brief on the performance of the company, which may be followed by the questions. The export market during the June 2023 quarter showed sign of improvement with better specialty sales. Overall, specialty volume for the June 23 quarter was about 65% of the company's total BOPP volume, which on a comparative basis number was 62% last year. Towards the end of the June 23 quarter, there was a sharp correction in the prices of the raw material, which caused non-repetitive inventory loss of about 20 crore during the quarter. Although now the raw material prices got stabilized from July 23 onwards. During the quarter, the BOPP demand has started picking up. We are hopeful that the demand-supply balance should get restored in the coming quarters. In case of BOPET, where the supply is far in excess of the demand, it may take many more quarters for the supply-demand gap to get bridged. Accordingly, BOPET margins are likely to remain under pressure. Cosmo, with over two-thirds of its revenue coming from specialty film, could withstand the margin pressure to a large extent and very clearly outperform the industry once again. BOPP film margin has been running close to 10 rupees. Here margins means the gross margins, 10 rupee per kg during the June 23 quarter compared to 10 rupee per kg during the March 23 quarter and 40 rupee per kg during June 22 quarter. As you know, this is quite lower compared to the average historical gross margin, which has been in the range of 25 rupees per kg. It may please be noted that even in such a challenging market, companies' specialty margins remain broadly intact in line with the last year, except for some changes due to product mix change. While the commodity margin has come down broadly to 1/4 of last year margins, specialty margins largely remain firm. Semi-specialty margin has also come down by close to 30% compared to last year. We have provided more details about it in company's investors presentation uploaded on company's website. With an objective to promote sustainability and rationalize cost, the company is looking for sourcing more than 50% of power through renewable sources. In this direction, renewable power has already started for company's largest plant in Gujarat during Q1, and it's expected to get started for the other two plants during FY2024. Besides promoting sustainability, it will facilitate companies' cost rationalization in a material way. While coming to outlook, the company expects position to improve in the coming months bringing an end to quarter decline phase, which has been happening from last couple of quarters. There is already marginal uptick in the margins witnessed in July 2023, which is continuing. Besides specialty sales, the company shall focus on various cost rationalization initiatives during FY24, aggregating close to 50 to 60 crore rupee annualized impact. We continue to build our specialty film portfolio by adding specialty polyester film, including shrink label and sun shield film, which would further strengthen company's overall margins and also ability to withstand the margin pressure, if any, in the future. The company will continue to build its specialty products portfolio and maintain its lead over the industry. Coming to June 23 quarterly financial results, the consolidated sale for the June 23 quarter is 658 crores, which is lower by 8% compared to March 23 quarter. Although standalone volume remained in line with the previous quarter, the drop in consolidated sale is mainly due to higher intra-group sales elimination, which is sales from India to overseas subsidiary, and some temporary lower volume in subsidiaries. The EBITDA for the quarter is 55 crore rupee compared to 74 crore rupee in March 23 quarter. This drop is largely because of the inventory loss which we have already discussed. At the end of March 23, the company's return on capital employed and return on equity stands at 16% and 20% respectively, which is very clearly on the leading side in the industry. Moving to flexible packaging growth projects. Work on BOPP and CPP line is progressing in line with the plan. Both the lines will be world's largest production capacity lines and will increase company's production capacity by close to 45 to 50% in a phased manner by March 2025. With high-speed large width line, it will rationalize cost of production between 3 to 5% depending on the product. The CPP line and BOPP line will promote sustainability as it will offer mono-layered structures. Coming to company's subsidiary Specialty Chemicals. The Specialty Chemicals subsidiary is all set to launch newer adhesives during second half of FY24. Now, adhesives along with the master batches and coating vertical will drive future growth for the company subsidiary. Moving to pet care vertical Wrigley, the company's direct-to-consumer pet care vertical, which was launched under the brand name Wrigley, is progressing in line with the plan. The current monthly GMV run rate is close to 3 crore rupee, which is targeted for 10 times growth in next couple of years. Wrigley has served now more than 24,000 customers with one-third repeat customers. The acquisition of Petsy, which is online venture in the pet care space, which we have announced earlier, is complete now and would further accelerate company's growth into pet care. Overall, Wrigley is all set to make substantial impact to India's pet care industry. Moving to key items on the balance sheet side, the company is looking for close to 500 crore rupee of capex by March 2025 in phases, which will be largely on the value-add capex on the BOPET line, means the technical films, CPP line, BOPP line, and some capex in specialty chemical and Wrigley. The company's net debt now stand at close to 477 crore rupees, which is 1.4 times of net debt to EBITDA and 0.4 times to net debt to equity. I think those were the updates from the company side on the quarterly results. Now we would like to open the call for the questions, please.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Nirav G from Anvil Research. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. So I have two questions. So one is on the size of Indian BOPP industry. So if you can just walk us through in terms of the current capacity and the demand, how much capacities have been added over last 1.5 years, and how much are expected to be added over next 1 year. So if you can just walk us through that.
Yeah, hi. The BOPP capacity right now is close to, I'm saying producible output here, is close to 75,000 tons per month. And domestic sales, depending on month to month, varies from 52,000 tons to 58,000 tons. And export is close to 15 to 20,000 tons.
Okay.
We talk about BOPP market, it is largely balanced. Obviously, in some months when the domestic market is a bit dull for either seasonal reasons or something else, and in the same month if the export is less, then we see some pressure on the margins, and otherwise not. I mean, things are obviously improving month on month. As far as the BOPP capacity is concerned, in last since 21, because I think there was not much capacity added in 18 and 19.
Yeah.
From 21 onwards, there are 4 lines which have been added in the domestic industry, and their producible output should be close to 160,000 tons. So per annum, which means roughly 13,000-14,000 tons which has been added.
Okay.
If I talk about polyester also has a capacity of around 80,000 tons, almost similar numbers.
Okay.
However, the export market is quite impacted for the time being, and therefore the overall export has gone down. In polyester, obviously the new capacity added is much more, because if I recall, there are close to 10 lines which have been added since 21. And there the producible output which has been added is close to annualized, this is 3.5 lakh tons, which is 30,000 tons per month. So in case of polyester, certainly there is an overcapacity of easily 10 to 15,000 tons per month, and we feel that it will take anywhere between a year and a half to get this capacity fully utilized.
Got it. And so for the BOPP, do we see the capacity additions happening over next 1.5 years in terms of newer lines being announced by the players? So what's the outlook over there?
In 1 year, there is no new line. In 1.5 years, there will be one line. Okay. If it does not get delayed, and in let's say 21 months, Cosmo line is also getting added.
Yeah, correct. And so this operational capacity is what you mentioned. We should assume close to 70-75% of their installed capacity, or how the metrics works there?
Yeah, broadly it is 75% of. I mean, it can change here and there, so it normally stays between 70 to 80%.
Got it, sir. So second question is on the cost savings which you alluded in your opening remarks. So where you mentioned that one of the largest plant of ours in Gujarat has now been on 40% renewable power. 2 more would be installed. So I was just going through our annual report, and our power cost in FY23 was close to 168 crores. So once we are installing our lines on renewable power and 50% of our power would be then coming from the renewables. What sort of cost savings could happen here? And you mentioned some figure of 50 to 60 crores also on an annualized basis in terms of the overall cost savings. So if you can just break it down between how much of the savings could come from power side and how much could be the other cost savings, and where we are actually working for this cost savings.
Almost 70% of this will come from power cost savings through multiple initiatives. One large initiative is moving to renewables. And 30% would largely come from raw material and some other minor initiatives.
Correct. So when can we see the impact of this 50 to 60 crores accruing to us on a sustainable basis? So could it happen next year, or could it happen for H2 of FY24? If you can just walk us through the timeline in terms of these benefits of cost initiatives.
Yeah, they will accrue in phases. One phase will accrue from quarter 2 already. It has started accruing. And within 1 year, all of this will start accruing in the P&L.
Got it, sir. Got it. Thank you so much, sir, and I'll join back in the queue.
Thank you. The next question is from the line of Aditya Rathi of Equitas Investments. Please go ahead, sir.
Yeah, thank you for the opportunity, sir. So my first question is related to the specialty margin. So if we see the average of FY23 compared to the Q1 average, the margin has fallen down. So if you could break it up for us as to the reason why the margin fell, and how should we see this trending going forward?
Yes, so see, specialty, there is no margin fall at all. There's only, we had earlier mentioned that export market in last 2 quarters was quite disturbed, because in the earlier quarters till July, importers outside India, they had imported more films from us in anticipation of COVID-related disturbances. Post-August, we started seeing some decline in export volumes. Most of it got corrected by March. However, only one set of one set of product line, we still see an impact there. So there is a slight impact in the mix, or basically one set of product line is not ordering still. The customer is very much intact. Rest, everything is back. So if you really ask me, specialty films, there is absolutely no impact to our margins. Semi-specialty, we have always stated that it declines to some extent, or it goes up to some extent in line with the commodity margins. So semi-specialty margins have actually come down from last year by 30%, from 55 rupees to 38 rupees. So there is an impact in the semi-specialty margin, but when it comes to specialty, there's absolutely no impact. Now the good news is, the previous 2 quarters, the new growth was also curtailed, because importers in generally were saying that, look, we have too much of inventory, so we do not want to talk about new business. But we have started seeing already some good movements from May and June, and a lot of new additions are expected to happen within next 6 months. So the specialty sales, which was growing for more than 25 quarters, had a decline starting from July to September quarter. We already have seen a good improvement in April to June quarter, but we still not have surpassed our highest. And we feel that that trend is already reversed now, and sales team has traveled extensively in last 4-5 months, because customers are looking back to normalcy and putting new orders, testing new films, testing new solutions. So we see that specialty films, which was not growing in last 2-3 quarters, will start to grow again.
Great, perfect. And sir, the customer that you mentioned that one has not come back, any indication from them when they will be back?
Yeah, they have given us an indication of August, September. The sales team was continuously talking to them. I'm going to personally talk to that customer and try and understand what is the situation, why is it taking so much time. But as of the current discussion that sales team had, they're talking about August, September.
Understood. Sir, and my second question is related to the CAPEX announcement which came just 2 days back. So just needed some clarification with respect to this. When we announced 55 crores for Sunshield and the second capacitor, the 32 crores, so is this part of the 100 crore value add on BOPET that we had earlier announced?
The capacitor has nothing to do with the value add of BOPET, but window film certainly has.
Okay. So out of the 100 crore, 55 crore is this, and the 32 crore is the additional capex that we are willing to do.
That also we had announced earlier that is similar to BOPP, but there we will buy the film. Most likely we'll import the film. We'll do the specific value add to it and sell in the market.
Understood. And sir, the third one, the rigid packaging. So what are we planning to do in that?
Rigid packaging is very similar to the flexible packaging. We will have same set of customers. The only difference is we will have much more business with the brands than the flexible film. Where those are businesses with the brands, but we end up selling to packaging companies. Here there will be a direct interaction. There will be similar kind of raw material, and there are a lot of inherent strengths of this business. But it is very similar to flexible films. It's flexible and rigid. But we'll be obviously one of the very few companies in the world who will have both solutions for flexibles and rigid. And as a part of this, we'll make containers for the food industry.
Okay. So what's the kind of revenue and margins that we are looking in this particular business going forward?
It's a new business, to be honest. It will initially take some time to scale up.
Okay.
Because there'll be, again, detailed set of trials, printing element and design element which is involved into it. But once it starts to scale up, the current capacity that we have put up to begin with can give us a revenue of 100 to 125 crores. Okay. And we feel that this business can have given that we'll be initially still small in this business, will give us close to 15% EBITDA levels.
Understood. That clarifies my question. Thank you so much.
Thank you. Participants, if you have a question, you may press star and 1. The next question comes from the line of Harsh from HDFC Securities. Please go ahead, sir.
Yeah, thanks for the opportunity. So I had a question, considering the addition of 2 new lines this year and, anticipated arrival of 5 more lines next year, along with the current demand scenario. So could you please provide, your perspective on how to assess the outlook for this industry?
So we never said that there are 5 new lines coming up next year. We said only 1 line will perhaps come in 1 to 1.5 years.
Okay.
The BOPP industry had some oversupply in last 3-4 quarters. One was that the entire outlook was a bit dull. The exports were dull. The domestic market was also, especially the textile market, was reeling under pressure. We see already an improvement in both the export market and some initial improvement has started coming in the textile market. So we now see demand supply quite reasonably balanced. There may be still slight oversupply in the BOPP as such, and we do not expect BOPP to remain oversupplied even in the next 1.5 years, or even, let's say, 2 years. When you talk about BOPET, there is clearly an oversupply of 10 to 15,000 tons per month, which will take 12 to 18 months. But we do not have much of an exposure in the BOPET. We are largely a polypropylene-based supplier than a BOPET supplier.
Right. And on the recent announcement on the expansion, so is the new facility coming in, the new capacity coming in our existing facility, or is it a greenfield?
It is coming in the same facility, the new capacity.
Right. And additionally, sir, if you could help me with the debt number as of June 2023, and how do we expect it to move forward?
Debt is around 450 crores, net debt.
Net debt is around 450 crores, okay.
And, obviously, over the next 2 years, we have incremental capex of close to 400-450 CR. we expect a large part of it to be funded from internal accruals. The overall debt may go up from 450 crores to some extent, but obviously that is dependent on what kind of profitability numbers we'll have in next 2 years.
Right. And sir, on specialty chemicals, if you could share our status of current status of the business, and how is the market shaping up?
Yes, see, these are a lot of innovations that we are doing in Cosmo Specialty Chemical.
Right.
We have last year did a revenue of close to 170 crores within the second year, and we continue to make new products. We are, adhesive is something that we have. We've been testing the market for last 1 quarter. We expect that this will commercialize within next 3 months. And adhesive could be a large business for us in the years to come, and so is the coatings. But this is still early days for this business because there's so much of innovation required. This business is not so much capex; this is pure innovation business.
Right. So thanks. That's very helpful. I'll come back in queue for the follow-up.
Thank you.
Thank you. The next question comes from the line of Bhavesh Chavan of IDBI Capital. Please go ahead, sir.
Sir, in terms for Ziggly, when do we expect it to become profitable at operating level?
This should take us, obviously, consumer businesses are very hard to project, but we feel in a 2 years' time, 25-26, in some quarter we should start to make money. But the good thing is quarter-on-quarter or month-on-month we are seeing a ramp-up in revenue. And now we feel that we've understood this business fairly well. And we feel that now the growth should happen even faster. Because initial 1.5 years we had to do a lot of trials. We had to make sure that we make our business model perfect. And now we feel that, we have reached to a reasonable conclusion in terms of what is the perfect or the best model for us and how we are going to scale up. We're already seeing a good quarter-on-quarter growth, and we feel that this growth will even become faster.
So, sir, in terms of it's an unrelated business compared to our when we compare our BOPP or even BOPET business. So, when should we expect that some sort of a demerger happen? Is it that the management thinks that it only after it becomes profitable we might look to demerge or something like that?
You are more or less right there. Though we have earlier said that within the calendar year 25 we would look to demerge. But yeah, ideally speaking, we would like to demerge when we will be kind of break-even situation, and which we feel that in the calendar year 25 we should start to hit the break-even numbers.
Yeah, and so lastly, in terms of BOPP spread, do you think they are bottomed out?
Sorry?
In terms of BOPP spreads, do we feel that it's now the margins have bottomed out?
Yeah. In fact, if you see our media announcement, we have clearly stated expects worse to be behind.
Yeah. So this, how is July, August shaping up, sir?
This is looking better for sure.
Okay, sir. Thanks a lot. Yeah.
So much in this, but yeah, things are getting better.
Okay, sir. Thanks a lot and all the best.
Thank you. The next question is from the line of Guneet Singh of CCIPL. Please go ahead.
Hi, thank you for this opportunity. So I just want to understand in terms of how the market conditions are currently. We are sitting in August right now. So what kind of outlook do we see for FY24 in terms of top line and bottom line? And as we see that the worst is behind in terms of margins, so what kind of margins can we expect overall for FY24?
We normally don't like to give forward projections any which ways. Now the new SEBI regulations doesn't allow us to comment. But I think quarter on quarter we do expect that worst is behind and there should be improvements.
Okay, so without giving any guidance in terms of revenues, I mean, would we be able to maintain the revenues we achieved in FY23, or do we expect, I mean, some sort of a growth over that?
See, if you really see, our volumes are already growing because last year we added BOPET line. So our volumes are growing, but what really happened is that the raw material cost has really gone down tremendously. And given that, most of our volumes are linked to raw material, close to, I would say, 60 to 65% of our volumes are linked to raw material. And therefore, if the raw material comes down, our revenue also comes down. So in volume terms, our revenue is already going up. It is just that temporarily the last quarter raw material prices really went down quite a bit. And what we see is even the raw material prices have bottomed out. And now they should only go up from here. So therefore, even the revenue numbers should go up in the next quarter.
Got it. So, I mean, directionally, if we look at FY23, we had around 12% EBITDA margins. So, I mean, directionally, since we are saying that the worst is behind us, I mean, can we expect at least last year's margins this year? Or, I mean, how, looking at the market conditions currently, I mean, how do you expect the margins to be, profile to be?
Obviously, our EBITDA margins last year was 14%, but I don't know if you're excluding other income to add that. So most of our other income is linked to business. But irrespective, as I said, it's very difficult to forecast numbers. But I will repeat myself that we expect the worst to be behind us.
All right. Got it. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead, sir.
Hi, sir. Thanks for the opportunity. So can you give the revenue and EBITDA figure for Petcare vertical this quarter?
Yeah, we have already given in our media announcement that we've already started touching our gross sales of 3 CR in the last quarter, and July was even better, and we expect August even to be better. So it's month-on-month increasing.
No, the 3 crore is the monthly run rate of revenue, but what about EBITDA, sir?
What about?
EBITDA level.
Yeah, EBITDA levels right now, obviously we are making losses. And, as we said that it will take us minimum 2 years to be profitable.
No, but can you share the EBITDA level, please?
Yeah, right now we did around roughly 7 crores of losses.
That is at net level or EBITDA level, sir?
EBITDA level.
Okay, and sir, can you split your 65% specialty sales into specialty and semi-specialty?
Broadly, it is 50-50, slightly skewed more towards specialty than semi-specialty.
Okay. Thank you, sir.
Thank you. The next question is from the line of Nihar Dave from Valium Capital. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I just wanted to ask, so in the previous quarter, you had mentioned that close to 75% of our CSC is being used internally. So are we, what is the change that we are expecting on that, and what kind of cost savings are we looking to make once, CSC starts expanding?
You see, right now most of the new sales will happen in actually external, and they may not be as much internal. Whatever internal we have to do is already happened. So now the new growth would actually come from external sales. Whatever cost savings at the group level had to happen has already happened. And what is really happening in CSC is that we are having these savings at the same time we are investing in our future. So last year also we had a very small EBITDA. Years before also, these are all single-digit EBITDA numbers that we had in last 2 years. And the EBITDA numbers are right now lower for CSC because of the reason that we are investing a lot in the future growth. So we have a very strong R&D team. We already have manufacturing and sales team. So there are a lot of fixed costs, which is taking away some of the EBITDA for the future growth.
Okay, got you. And my second question is, can you give me the revenue contribution for specialty, semi-specialty, and commodity films, please?
It really fluctuates a lot from, we give in terms of volume terms what are the percentage to overall sales, but it fluctuates a lot from quarter on quarter because commodity prices keep changing a lot.
Okay, got you. And so my final question is, what is our concentration in terms of countries as far as our exports is concerned? Because I see US, Mexico, and Germany and UK are major destinations for us, if I'm not mistaken.
We are a very well-known global brand. That is the reason we have customers in more than 100 countries.
Okay, got it. That will be all from my side. Thank you very much. Best of luck.
Thank you. Participants, if you have a question, you may press star and 1 now. We have a next question coming from the line of Namit Bhaiya. He is an individual investor. Please go ahead, sir.
Hi, Pankaj. Hi, Neeraj. I wanted to understand the inventory loss that you had in this quarter. I thought this industry was mostly operating on a cost plus basis. However, in this quarter, we had a 20 crore loss. I think in quarter 3 also last year, we had about a 14 crore loss. So just wanted to understand how exactly the inventory mechanism or the cost plus works.
You see, in the COVID period, raw material prices continue to go up. And obviously during COVID 2 years, we made substantial profit also. And I'm sure some of the profits would also be linked towards stock gains that we had during that time. Because at that time, everything was continuously going up. Post-COVID, there was one major correction, as you rightly pointed out last year, and there is one major correction which happened now. Obviously, these price corrections happen also to some extent in the sales price also. There could always be minor timing gaps. And we, as I said earlier, that we've already bottomed out on the raw material. This is what we feel. And therefore, raw material costs should also now start going up.
Okay, so there is a possibility of minor both side corrections as in upward gains as well. It's not like 100% pass on industry as in on the raw material.
So see, if the demand supply situation remains constant, then this industry certainly passes on the raw material ups and downs.
Right. Okay. Understood. On your BOPET line, the BOPET line, the 30,000 empty capacity that you have, so how is our capacity utilization over there right now? And since we are focusing mostly on specialty BOPET, do you foresee any issues in ramping up that utilization given the commodity side of BOPET being heavily oversupplied?
See, BOPET we intend to have largely specialty films. We have already one is shrink labels, but we have also come out with 3-4 very beautiful films. One is meant for microwave oven film, which is again a very beautiful film. We have come out with obviously window films. So there are a range of films that we are going to come out with that line, but specialty takes a lot of time. And we had earlier said that in 3 to 5 years, we expect this line 50% to have specialty films. So this is just the beginning of the business. We are developing already, I would say, close to 150 tons of monthly volumes we have picked up on specialty films. And as we move along, this will continue to go up for us.
150. So that's about 2,000 tons on specialty right now. So that's about 10%, or a little less than 10% on this
Which is very less, but it takes time. So quarter on quarter, there will be growth, and maybe in a year's time, if you'll ask us again, this 2,000 tons may move to 5,000, 6,000 tons.
Understood. So the remaining part would, as of now, in the foreseeable future as well, may not yield a lot of returns for us because of the industry oversupply situation in BOPET. Yeah, BOPET, for next 1 year, we don't expect any
any decent margins to be made. Right now, to be honest, we are making EBITDA losses on the BOPET line because the capacities are also not fully utilized. However, what we feel is that sooner than later, at least we'll start doing EBITDA break even on this line. The profitability may take a year and a half time before we start making some money.
Understood. And on your specialty chemicals, what's our utilization? Last quarter, I believe it was about 50%. So how are our plants over there getting utilized now?
Actually, quarter one, to be honest, was even lower because one of our master batch lines had some issues on the line, which we are trying to correct along with the supplier. There's one particular component which did not work well. So last quarter, our utilization had actually gone down rather than going up. That was not because of demand, but because of some equipment challenge, which should get sorted out. And it would take some time before we get fully utilized. And majority of this extra capacity is actually in adhesive, which is just a startup of the business. So it will take, I feel, 1.5 to 2 years for this capacity to get filled up. All these are innovative businesses, and this does take time. But once it takes time, then it gives you permanently higher margin for a very long duration.
Understood. Lastly, on Ziggly, so I think in March we had 15 experience centers, and now we have about 16. Whereas our target is to reach 200 by March 25. So are we on track for that? Is the pace likely to increase, or how is it going to be?
We never said 200 by March.
100.
We said we intend to have 200 overall. 200. We actually never gave any upper limit. We said that till the time we find that there is a scope, we'll continue to expand. We feel that the inflection point for this industry will really come from the year 26-27, and there is a certain logic for that, which obviously I can't share in this call. So we will continue to open more experience centers, come stores. Obviously, after a point in time when the brand is established, we'll start opening franchisee stores also. But I don't think so. March 25, we look to have 200 stores. By March 25, we'll have maybe close to 75 stores at best.
Understood. Okay, fine, and thanks, and all the best, Pankaj.
Thank you.
Thank you. Participants, if you have a question, you may press star and 1. Participants, to ask the question, please press star and 1. We have the question from the line of Logesh Selvaraj. He is an individual investor.
Hello. Good evening, all. My question is regarding the recent increase in the promoter stake in the company. I'm curious to know whether the promoters are considering further increasing their stake in the near future, and if so, what factors are influencing this decision?
Can you repeat somehow I'm not able to hear your question clearly.
Yeah. My question is regarding recent increase in promoter stake in the company.
Yeah.
I'm curious to know whether promoters are considering further increases their stake in the near future, and if so, what factors are influencing this decision?
Yeah, our promoters certainly feel that our share is highly undervalued. There's a lot of value to be unlocked in the years to come.
Yeah.
We feel we are creating some very big businesses in the next 4-5 years. And I'm sure that must be the reason that promoters have gone to acquire, shares. And they definitely look very, very, very optimistic on the company. And though it is their individual decision, but what I understand is that, yes, they do understand that there's a very good opportunity for them.
Okay. Thanks a lot. That's it from my side.
Thank you. Participants, if you have a question, you may press star and 1. We have a question from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead, sir.
Just one small clarification, sir. So this specialized BOPET line, what is the capex for that? Because on slide 16, it is mentioned as 100 crores, and slide 21, it is mentioned as 450 crores.
Yes, the total capex is 450 crores. The specialty, the value-add section has taken 100 crores on it, but overall capex is 450.
450 crores for and what will be the capacity of that line?
Close to 30,000 tons.
35,000. So it will come online in phases, sir?
Sorry?
It will come online in different phases?
Yeah, most of it had already come last year. The balance will come along with the window film line in the current year.
So, lastly, out of 450 crores, what is the capex we have already incurred on this line?
We have already incurred close to 375-400 crores.
Okay, sir. Thank you.
Thank you. Participants, if you have a question, you may press star and 1 now. Participants, if you have a question, please press star and 1. Since there are no further questions, ladies and gentlemen, that was the last question for today's conference. I now hand the conference over to the management for the closing comments. Thank you, and over to you, sir.
Thank you. Well, the company's strong specialty film portfolio should continue to deliver superior returns, is what we feel. Although the near-term outlook for the BOPP and BOPET may be little challenging, we are working on several cost rationalization projects, R&D projects in the film business, which will continue to provide edge. Ziggly is rapidly becoming well known among the pet parents, benefiting all pet lovers and the company's stakeholders. Specialty chemical division should continue to double its revenue from here in years to come. In the last, I would like to repeat the statutory declaration. Certain statements in this phone call may be forward-looking statements. These statements are based on management's current expectations and are subject to uncertainty and changes in circumstances. These statements are not guarantee of future results. Thank you very much for joining. We really look forward.
Thank you. On behalf of Cosmo First Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your